So we've gone through plenty of topics on the History of Money series, but today I want to talk to you about the day when money almost died. Not because it was stolen, not because of some disaster, but because people stopped believing that tomorrow it might actually be worth anything. In the early 1920s and in the aftermath of the First World War, Germany was struggling. The government had huge debts. It was trying to pay repatriations for the war. And instead of cutting spending or raising taxes, it did something that seemed easier. It printed money. At first, nothing dramatic happened. Prices went up a little. People complained, but they carried on. But inflation feeds on itself. Once people start expecting prices to rise, they rush to spend. Businesses raise prices faster. Workers demand higher wages. And by 1923, inflation wasn't just high, it was totally out of control. Prices were doubling in the space of days, sometimes even hours. People were getting paid in the morning and again in the afternoon, because by lunchtime their wages were already worthless. And check out these images. Wheelbarrows full of cash, children stacking banknotes like building blocks, and money literally being used as wallpaper. And the most disturbing part of it all was people actually burning wads of banknotes because it was cheaper than buying firewood. And the bit that most people miss is that money didn't fail because there wasn't enough of it. It failed because it lost all credibility. Money at the end of the day is just an agreement. It's essentially a shared belief that any money you earn today you can spend tomorrow and it'll essentially be worth the same value. And once that belief breaks, the system doesn't bend a bit, it literally snaps. And this is why modern governments and financial systems are built the way they are. Why central banks obsess over inflation. Why any printing of money is treated with caution. Why fixed interest rates exist. And not just in mortgages, things like government bonds as well. And why long-term financial planning exists at all. None of this stuff was invented randomly. It's all been designed to stop this exact scenario from happening again. And we've come close a few times. History doesn't repeat itself exactly, but it often rhymes. And every rule, safeguard and system you rely on today has been built on the lessons of history, from things like Germany in 1923, when trust literally disappeared, and the whole concept of money nearly died with it. I'm Patrick Weightman, your local East Midlands Mortgage and Protection Advisor. This has been yet another episode of the History of Money, Mortgages and Insurance. And if you want to hear more, then give me a like or a follow. See you soon. Bye-bye.